Hello everyone and welcome to another Elliott Wave Forecast video day. My name is Eric. Today is the 15th of August around 3 p.m. Eastern Times. And guys, today we're going to take a look at a very interesting topic across the market. A topic which reflects the idea does the U.S. economics is gonna enter the recessions. This being over the news since the last 24 hours, for not, I mean, we understand that many traders pay attention to news, but for us in Elliott Wave Forecast, we really do not pay attention that much to the news. What we do is we read the market, we understand the oscillation, the correlation especially, and we go from there. Back about 3 years ago, we did this blog in which it was in 2017. We did this blog in which we mentioned to clients, we made the blog public, we mentioned to everyone that follow us the idea that the best way to sell the S&P or sell the world indices is nothing more than buying silver and gold. We, many traders do know, but we do understand the dynamics of the market. And we do understand that every market is related. And consequently, with that assessment, we always trade. I mean, there is no other way, at least in our book, to be able to be successful in trading if you do not understand the correlation between instruments and the market and the multi-sector, multi-market and things of that nature. Without that, honestly speaking, guys, it is almost impossible. In this blog back in 2017, we explained that silver right there was an unequal legs. I'm going to show the count now from the 2000 peak. We mentioned also that gold, if missed the 50% back of the whole all-time cycle, grand super cycle, but it was close to rally the world production in silver. And we mentioned that the S&P was within a blue box at that area. We mentioned right there that it's going to be a dip and another rally, and that the S&P has a potential at least to end the cycle from 2009. Now, this is a chart overlaying the correction between from 2000 to 2009, this blue area in the S&P quarterly chart, and the strong rally in silver. Now, that was in 2007. Back in 2007, this is the charts of silver that we are presenting to clients. I was very vocal telling our members, I was very vocal telling our members that that buy silver, physical, and buy silver and gold physical and into the future. Why? Because silver, this is the weekly chart from the all-time lows. It did a 5 weeks advance over here, and then silver from 2011 peak decline in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and 11 swing. Or to put it simple, to not so deep into Elliott Wave traders, 1, 2, 3, 4, 5, 6, and 7 swing, and it reached the target within this correction at 1371, and since then, which is our blue box, silver has been sideways and supported, but it hasn't dropped. Now, let's be realistic here. Silver at $1371 per ounce is a gift, right? It is a gift. In something that has a value at once or almost $50 an ounce at $13 is a gift, but it's not only the gift, it's the cost of producing silver. It's not that far away from that 1371. Now, When does the multi-market analysis comes in place? It comes in place when we do understand this chart over here. This is the S&P quarterly chart. In Elliott Wave, we got something that is called grand super cycles, and consequently a lot of lesser degree cycle. This is the grand super cycle in the S&P, right? And the grand super cycle is within a blue box, the same way that silver in this super cycle degree in the previous chart was in the blue box. Now, the market, what it was telling us, and it's still telling us, is that the biggest acceleration in the S&P or in the world indices from the all-time lows is about to end. The S&P advance over here, it comes in two super cycle degrees. One is this and another is this. And the whole thing makes the grand super cycle. This cycle is about to end. And I want to be clear, I'm saying that we are not calling a crash in the indices. We have data that we presented to our members on the daily basis that support that there will not be yet a super crash in the indices. But the indices, the biggest acceleration in the S&P is about to end, which is this super cycle degree from here. The reason is that, and I say is about to end, because for us, nothing has happened in the market, or there is no reason to anticipate a decline in the market yet, as far as the S&P stay, but about that trend line. But this is critical thinking. This is common sense. You got silver from 2011 trading lower into a grand super cycle buy, which is this one, because silver sooner or later it will trade up to here. It cannot go lower than zero. But when you look at silver right there, and you look specifically at this area in the S&P from the correction saying 2000 out to 2009, we can notice that in silver, that's when the rally started. That's when the super cycle degree here in silver started and accelerate. Of course, the biggest acceleration was in the decline of 2007 because this was a flat. Now, our suspicions always been, and the reason why we made this blog, which is tremendous right now, the smartest way to sell the world indices is silver, is buying silver, is because our suspicion was that silver at these areas of 1371, 801, there was a floor. It couldn't drop that much. There is no way that it's going to make another cycle similar to this one. So it has no other way to go higher. But I also do understand that silver is starting to rally, right? Starting to send a signal to the world indices, a warning that the world indices are about that sooner or later they're gonna make this decline. And that decline in the world indices, in this case the S&P, is what silver is warning us right now that sooner or later is gonna happen. I repeat, our members in Elliott Wave Forecast know our idea in more detail. They know our opinion. We are not calling yet for a crash in the indices. We are just saying that the warning that silver is sending is that silver today should be trading something similar to around, let's say, around 2003, 2004. That silver is gonna continue to trade higher like it did over here around 2007. Then at one moment, silver is going to pull back. And at that moment that silver pull back is when the peak in the world indices will happen. I think that we are years away from that moment. Couple of years, 3 years, 4 years away from that moment. But the signs are there already that the biggest acceleration, which is this powerful cycle degree over here, this powerful cycle degree over here, in this powerful cycle degree over here, and the S&P is coming to the end because silver is gonna create something like this, and then it will put back over here, and then silver is gonna accelerate. It doesn't go in a straight line. If you look at the past data, you see it was providing a series of highest high, highest low, higher highs, highest low, and then decline, and the acceleration comes. I think that history, it will repeat itself. I think that silver is sending the warnings that what is coming, which is a huge and tremendous decline in the world indices. Years from now, doesn't have to be today. I mean, years from now, right? Years from now, a year from now, sooner or later, a huge decline it will take place, and that will place silver around $60 an ounce. But the process of the biggest acceleration in the history of the indices, which is this cycle from 2009, is coming to the end. It hasn't shown the face yet that it ended. We are not showing that it ended as far as it stays about that trend line. But soon, look at the magnitude of this correction. It took 9 years. Soon, I believe that the market will need to decide if the S&P is going to do a 4 and then a 5, and that 5 will be silver correction here, or these things is going to get led straight from here, and then the biggest correction in the indices will come from around this blue box. Very interesting moments in the world indices. We keep telling that to members of Elliott Wave Forecast in every single live sessions. We have our thinking to favor one path over the other at this current data. But we know that we're getting closer. This is not anymore the same market when we in Elliott Wave Forecast, when the S&P was here, we say that it's gonna go here. This market is sending warnings, and we in Elliott Wave Forecast, we do not hold a buyers. We've been the bullish servers, and we always gonna be the bullish servers in the market when it comes to the indices, because it's human nature. But we know when warnings are across the board, and this silver bounce from here is one of them. Last week we did a blog also about, it was at that last week, it was the a gold pound. If you go and you open here the chart of gold pound, it's been very nice here, but you don't need to be and go that far and say and overlay the gold pound there, which it has a bullet sequence again within this already finished the super cycle degree, and it's opening another. If you overlay in this chart the pound gold, don't get me wrong, you don't need to be a one second, let me put the right symbol here. If you overlay these two instruments together, which is the gold pound and silver, You don't need to be a rocket science to understand that this is the same. They are identical trade. So at the end, warnings are coming. Commodities going to be king when the index is put back. So be ready for years to come in which the indices most likely they will be sitting at the highest until they put back the biggest putback in humankind it takes in the market, even bigger than 2009. Yes, for now, you guys gonna be watching this video and you guys gonna know and gonna say, man, it was there. Why didn't saw it? Well, right here, this is the message. The warnings are across the market. Sooner or later, this market is gonna put back. I believe that the biggest acceleration since 2009 is ending or should be ending within the next 6 to 8 months. We're gonna get choppy and the market needs to decide if it's gonna go this route with another leg higher or the market's gonna start sitting at the highest and lower. Very interesting times for the market, at least our members knew back in 2015, back in 2016, that buying gold and silver was the way of picking the top in the index. We have never taught a member to pick or sell the indices or picking or fading this rally. That's not smart. Smart is finding instruments like silver, like gold, like the 10 years notes, like the pound ounce, gold pound to buy, which indirect is the same way of selling the indices. Very simple. Be careful. Be careful at this current time, and more important, be smart. If you like this video, you want to know more about where we stand, take out of our 14-day trials. You're going to learn a lot. You're going to be in the right side. And that's what matters. Understanding when to switch, when to hold, when to stand back in a particular instrument. Our members got clear instructions on how to trade and how to select which group to trade. The yen group, the stocks, the indices, the dollar, and on and on and on. That's what it's all about. Be smart. See you guys around. I hope you guys enjoyed the video. Thank you guys so